Hey everyone, wanted to share something pretty important because I always hear of a lot of people getting taken advantage of by deceptive marketing from lenders. It could be phishing via snail mail, texting, online bait clicks, so what you might see on websites, social media targeting, whatever sources you might be getting that information from, even on TV, from TV ads. It's absolutely everywhere because everyone knows I'm a lender, so even myself, I'm not immune to some of that deception that is out there. So over the weekend, I received something from, I'm sure everyone knows, Rocket Mortgage. About mid last year, they were Quicken, but now they have rebranded to Rocket Mortgage. So I want to share with you and show you what they sent me and point out some of the things that are little misleading or bait and switch. So the first thing you probably notice is like, oh hey, you know, this is a 29-year fixed mortgage. Not sure why they didn't just say 30, but mail date 110, absolutely incorrect because I just got it over the weekend, so basically a month ago, and rate as of then, maybe that's what it was, but the new monthly payment $11.81. So what they're trying to trigger in my mind is that, hey, this should be a lot lower payment than you currently have, and it is absolutely incorrect, because if you look down at the next part, and I highlighted the important things in yellow, monthly payment stated does not include taxes and insurance premiums. The actual payment amount will be greater. But do most people read this? They're probably just going to focus in on this. They probably won't even really look at the rate because all they care about is this. Not sure if you can tell, this is a little bit darker, a little bit more bold than the rest of the other things here. So that might make them think like, oh well, you're pre-selected. So if you're pre-selected, call 800 whatever number to speak to someone today. Their whole point again is try to get you to apply with them and for them to go through their whole pitch. And there's so much more information that needs to be known to actually have a rate discussion. But let's just go along with this. And it says, you know, hey, you could refinance. So this particular one is for refinance, not a purchase, but you could be getting stuff in the mail or Target or all of those different types of things for purchases as well, for a rate of that as of 1/10/2022. But here's the kicker: for the cost of 1.5 points. So based on this loan amount here, and they put a loan amount a lot lower than what probably the average loan amount is nowadays, because housing prices have increased so much, so mortgage amounts are typically a lot higher. Let's just say it's double for easy numbers. Let's just say it's close to 500. Then if this was double, let's just round it up to 400. So if you paid 1.5 points, that you could have, it would cost you an additional close to $8,000 on top of whatever your closing costs are. So that requires you to either bring in a lot more money for cash to close, or wrap in on a refinance, because you can't technically wrap in closing costs into a purchase, but you'd be wrapping in a lot more money into the refinance. So You know, one might call this equity skimming by the lender, because they're a little bit being deceptive, because you might be so focused on, again, the payment that doesn't include everything, or maybe this particular rate that they're offering that could be a lot lower than what you might have. So it's not necessarily all about the rate. It depends on the situation. So flipping it over, highlight some other additional assumptions they put here, and this assumes there is a debt to income ratio of below 43%. So what's going to happen if you're above 43? I'm sure the rate's going to go up. And then also this is so interesting here. Minimum qualifying credit score 808. You know, I've been doing this for almost 20 years, and I would say only a handful of people have had a credit score over 800. Even a excellent credit score would be in the upper sevens, and a perfect credit score is 850. So anything in the eights is very, very rare, and they require, for what they're showing, 808. So really, for most people, that even the rate of, you know, as of this date, 3.595% with 1.5 points for the typical consumer is going to be higher. And then also, not to mention, are you doing a cash out? How much cash out are you taking out? Is it a single family residence? Is it a condo? Is it a duplex, multi-unit, 3, 4 unit? So many additional questions that, unless there's everything, you're not going to know. So let's show you one more example of an online bait click, and this one is specifically U.S. Bank. Today's mortgage rates. They do update every single day, and as of today, 3.99%. But look at how far you have to scroll down. And you might just think, okay, the color changed here, so this must probably be the end of this page, this web page. But no, you keep on going, that's where the fine print is. And I want to specifically show you, because we're looking at a conforming mortgage, that included in the table above, which we just looked at, with a borrower paid finance charge of almost 1% of the loan. So let's just say, if in our example, if it was a $500,000 loan, that'd be an additional $5,000 on top of your closing costs. So, and then also they said finance charge. They didn't call it points. They didn't call it a buy down. And the reality is that, in my professional opinion, if you're buying points, it is an absolute waste of money, because every 1 point probably on average lowers the interest rate by about 0.25%. And let's just say that you save, I don't know, $30, $40 a month. But how long does it take you to break even? I don't know, 6 years, 7 years? The average, I would say, of a mortgage that's in use is probably 5 to 7 years. It never goes to the full term of 30 years. So if you're getting to that, say 5, 6, 7 year mark, you might break even. If you're refinancing or forced to sell prior to that, you just threw your money away by buying points to lower the rate. So absolutely not the best financial decision for most. And again, there's all this deceptive information out there. So if anyone just in general that you talk to that's a lender tells you, hey, we got the lowest rates, we got the lowest fees, and just off the cuff can give you a rate, I would stay clear, because they haven't done a full analysis of your file to see exactly what your situation is, and then based on your situation, programs and rates would apply to that specific situation. So final thoughts, it's really best to work local and support your local community, because a lot of us that are local, we do have a reputation that we have to uphold. So it's really, we try to be absolutely transparent and honest, and we're going to tell you what you need to hear, not what you want to hear. Because if you're going to get told what you want to hear and you start moving down the tracks, I guarantee you that things are going to change later after it goes to underwriting or before it closes, because it has to adjust. And most every single lender fishes in the same pond, being that we have the same investors for conventional loans, Fannie, Freddie, you might have heard of Ginnie for government loans. But the point is, at the very end, it's going to be more or less the same. So work with someone that you trust, work by referral, work local, and you'll probably be in fantastic shape. So if you have any questions whatsoever, don't hesitate to reach out to me, and please share this with your friends, family, and coworkers so they don't get scammed or anything that's deceptive, especially as they're going through the process of purchasing a home or possibly refinancing a home.